Hold on to your hats, folks. Blackrock is making waves in the crypto world with its spot Bitcoin ETF poised to challenge Grayscale's flagship fund. And assets under management soar. Get ready for a massive pump approved by the big player. Don't forget to subscribe, like, and share, and let's start. So we're starting off with, being a Bitcoiner in April 2024 feels like being one of the guys in the big short. We see that the system is broken and no one believes us, but we are shorting the whole thing with Bitcoin. The next one we're going for. Guys, I've posted the following almost a year ago, but in view of the upcoming halving, I feel like sharing it again to show and remind you that every single stack matters. You're staking Bitcoin, but you have less than one and may never own one. Don't panic, it doesn't matter, let me explain you why. Being able to call one Bitcoin your own is getting increasingly harder for most people as time goes on, and immeasurably harder at that. In my opinion, this development is far too rarely noticed, and that is because it is progressing quite slowly yet continuously. In a few years, there will be so unimaginably few individuals proportional to the total number of people on the planet that those individuals holding 100 million Satoshi will be rarity. Even crazier, further into the future, it will probably be hard to imagine that there were people who owned 100 times 100 million Satoshi, or even 1000 times 100 million Satoshi. The 1 Bitcoin target becomes 1 out of 10 star Bitcoin target, which is in turn becomes a 1 out of 100 Bitcoin target. With each halving, this target decreases further. Even though 0.1 Bitcoin is not much to many people today, I would like to point out the fact that proves to you that the 0.1 Bitcoin 10 million Satoshi is not only significant, it is generational wealth. So let's jump to the year 2044, which is about 20 years in the future. The 9th halving will most likely happen this year as the 9th epoch of the Bitcoin inflation plan starts. For the first time, 1 out of 10 of the Bitcoin will be issued every 10 minutes, which is 0.009 per block. Owning 0.1 Bitcoin in 2044 is proportionally the same as owning 625 Bitcoin today. The block subsidiary is identical in relation to ownership in both cases. If you have 10% of 1 Bitcoin today, in 20 years you will be the owner of the entire block reward, for which millions of people around the world simultaneously sacrifice their energy, time, and resources for 10 minutes, and of course to verify transactions in order to earn the fees. Your goal should not be fixed on 30 amount of Bitcoin, but your goal should be to be able to call the block reward of 1 Bitcoin block your property as early as possible. Even if it takes longer to achieve this, time plays into your hands due to the Bitcoin's inflation plan, and despite rising price values, all you have to do is own some and hold. The next one we are going for. Most people don't realize how early we are to Bitcoin. 93.6% of the supply has been issued and is held by people who very likely won't sell until we reach much higher prices. Most real estate investors have zero allocation to Bitcoin. Most stock investors have zero allocation to Bitcoin. Almost everyone I know has zero allocation to Bitcoin. Everyone will need it, almost nobody has it. And almost everyone who holds Bitcoin right now doesn't want to sell what they have. The price has to go up to fulfill the demand that's coming. If you think you're too late to Bitcoin at 70,000 and you're not buying, how will you feel at 350,000? What about 700,000? I don't know how to say this more clearly. Bitcoin's price has no ceiling. If you're looking for a way out of the current financial system, Bitcoin is the only chance you ever have, and most people are not capitalizing on that opportunity. Why is it so hard for some people to understand the use case of Bitcoin? It's money that they can't confiscate or control, money that doesn't require permission to use, money that can be created out of thin air. Literally takes 4 minutes to figure this out. Do the fucking work. This Bitcoin strategy could be one of the simplest. If analyzing charts become too grueling, your remaining energy should simply be used to know when the next Bitcoin halving will occur. Buy 500 days before the halving, sell 500 days after the halving, and repeat. Just in, Coinbase now allows UK customers to purchase Bitcoin using Apple Pay, as here we could see this one over here. As well as bullish Bitcoin consolidation. While funding rates are decreasing, shorts are being opened and longs are being closed. Looks bullish to me. The Bitcoin geometric mean of prior cycles aligned to the 2024 all-time high break is looking pretty good. Pretty good. That's what we have. US Bitcoin ETFs took the price from 45,000 to 70,000, and that's an 80% increase within just 3 months. Expect a similar outcome from China, mostly Asia, approving Bitcoin ETFs next week along with halving. Are you mentally prepared for 100,000? Blackrock closes in on Grayscale as Bitcoin ETF rivalry intensifies. Blackrock's spot Bitcoin ETF is rapidly gaining ground on Grayscale's flagship fund. Grayscale's GBTC has experienced declining assets under the management and trading volume. Analysts point to fee differences and strategic moves by Genesis as potential factors. The battle for Bitcoin ETF dominance is heating up. Discover the latest shifts in market share, assets under management, and expert analysis of this evolving landscape. BlackRock's ascendance in Bitcoin ETF market. BlackRock's spot Bitcoin ETF is steadily eroding Grayscale's once dominant position. Data indicates that BlackRock's fund could soon surpass Grayscale Bitcoin Trust in terms of AUM. This comes on the heels of GBTC premium turning into a consistent discount, creating arbitrage opportunities for institutional investors. Grayscale's declining market share. Analysts know that the GBTC with its higher fees has faced dwindling AUM and trading volume. Experts like Bloomberg's Eric Balchunas attribute this partly to Genesis potentially selling its GBTC shares to recoup losses. Competition heats up. Fidelity's entry into the spot Bitcoin ETF market adds further competitive pressure. Market watchers will be keen to observe how these major players jockey for dominance and whether this ultimately benefits investors through reduced fees or other innovations. Conclusion: the Bitcoin ETF landscape is witnessing a dramatic power shift. While the long-term implications remain to be seen, investors should stay informed as a rivalry between BlackRock, Grayscale, and others could lead to more accessible and cost-effective investment options in the future. Also, the price of Bitcoin fell following the release of information about the inflation in the United States. In the US, excluding food and energy prices, consumer inflation reached 3.8%, and on a monthly basis it increases by 0.4%, the same as the previous months. Cryptocurrency blogger Kadir Rohit is convinced that a higher than expected consumer inflation figure served as a bearish signal for investors in the leading cryptocurrency. According to analyst Matthew Miskin from John Hancock Investment Management, premature announcements by Federal Reserve officials about the future interest rate reductions led to a slight increase in prices. Analysts from the Grayscale platform believe that high inflation and the key interest rate are significant obstacles to Bitcoin's price increase in both the short and medium term. Earlier, the head of one of the largest American mining companies, Fred Thiel, stated that he does not anticipate a dramatic surge in Bitcoin price after the halving and believes that much of the anticipated price rally is already factored into the current asset value. So don't forget to subscribe, like, and share. See you in the next one, and peace.